G'day folks, Jim here from FX Charts, Monday the 7th of April. Thanks for tuning in. The reaction following the non-farm payrolls on Friday was a little bit mixed. The headline numbers weren't quite so good, but the upward revision for February and the increased participation rate gave the market a fairly solid look for the numbers. And consequently, the dollar performed okay against some currencies, lost a bit of ground against some others. The commodity block did pretty well, despite the stock markets coming lower. But against the majors, the dollar actually is beginning to look a little bit firmer to me, and could be on the verge of breaking some important resistance levels to take the dollar higher. So we're going to have a look at the charts, and if we start with the euro, the immediate reaction was a spike up on the slightly weaker number, but then the revision took the euro down to 136.70. At the end of the day, though, it finished pretty much where it started, about 137. Now, I don't think we're going to expect too much today. There's not an awful lot out today, actually. We've got the German industrial production and the Sentix investor confidence survey. I don't think they're going to create too much volatility. So we might have a bit of a sideways day, but the 4-hour charts are looking negative. And this is quite important support here. If this level goes at around 136 3/4, 136.80, which is that's Friday's low, and then we can get below this FIBO support around 136.60. I think there's a whole new ball game opens up. The first support will be down here at 136.45, and under that there's not really an awful lot till below 136, so it may take a little while to get there. As I say, there's not an awful lot out early in the week, and we may just be in for some more choppy trade. But it does look as though the euro is forming a topping formation and is slowly going to head back down towards, possibly down towards this so 134 3/4, but that's going to take a while. As you can see on the dailies, this is important support here. This goes all the way back it's about 12 months support. So but we're also seeing right on the 100-day moving average here, so it's not going to give away easily, but if and when it does, this is the first major FIBO support right here, where we're sitting just above at the moment, and below that the this is a longer term, of course. The 200-day moving average isn't seen to 135 1/4. So there's plenty of support before then, but it does look as though this is the direction we're heading in. And the dailies look as though they're just beginning to build up some downside momentum as well. So all in all, I think the euro could be headed lower. In a minute, we'll go and have a look at the dollar index chart as well, which is beginning to look fairly interesting. So my play for the day, though, is sell rallies in the euro. 137.30 was Friday's high. You've got this first FIBO level here around that 137.40, and then the 100 and 200 hour moving averages are up here around 137.60. So I don't think we're going above there today, and I'd be selling rallies if we saw it. If you do go short, stop loss, I guess, should be up here above this 137. What level is that? 137, 138 figure. Yeah, 138.0203. But there's a decent resistance up there as well. So I don't think we're really going to go too much higher. Dollar yen. Well, that made a new high by 1 pip, 104.12 on the non-farms, and then it fell apart really and finished near the day's lows. We're trying to recover this morning. We're at 103.30. I suspect, in the lack of anything today, 103.65 is the 100 hour and 103.05 is the 200 hour moving average. I think that'll cover it. I don't think we're going much below there. If we go and have a look at the Ichimoku chart, this is a daily Ichimoku. We've got the top of the cloud here at 103.10 or so. Below that, we've got the 100-day moving average, which is the rising blue line here, and the daily Tenkan. They're both at 102.85, and then below that at 102.60 odd, we've got the Kijun. So I don't think, I suspect that in the longer term, this will prove to be a buying opportunity. I don't think we should expect too much today, as I say, and we've got the BOJ meeting tomorrow. No changes really expected there. That might cause a bit of disappointment and might cause another push to the downside. if there's no change. The market's short of yen and hoping for a helping hand from the BOJ with some more stimulus. It doesn't look like it's going to come yet, but I think eventually it will. And as I say, I think dips are buying opportunities. I don't think we're going above 103.60, and I certainly don't think we're going back to this 104.10 level today. Cable, a little bit like the euro. Let's have a look at the dailies. Sitting on very important trend support. Now this is quite long term. If it does break this 165.70 area, then we're probably heading down to the 100-day moving average. That's 100 points lower, and that's where we got down to last week. So that's going to be important support. Nearer home though, we've got on the top side we've got the 100-200 hour moving average around 166 to 10.20, and I don't think we're going above there today. The downside probably looks supported at sort of 165.5 where we got to on Friday. The main event for the week will be the BOJ. The Bank of England. They've got their meeting on Thursday. Ahead of that, of course, we have got the FOMC minutes on Wednesday. Now that will provide the first real direction for the dollar against all the currencies, and I think until then we could well just chop around. But as I say, today I think probably 165.5. We're not that far away from it now. It's 165.75. If we broke 165.5, then we could sort of come down to this previous low down here at 165.10. Not sure we're going to do that. And as I say, I think 166.10.20 will cap it on the top side. Dollar Swiss is beginning to look interesting. It tried and failed so far to break this descending trend support. Now it got up to 89.50. It's currently at 89.20. Got up to 89.50 after the numbers on Friday. We've got the 100-day moving average here around 89.35. I'd be doubtful of heading too much above there today, but the dailies are looking positive, and I think buying dips is the overall game plan. Now in the short term, let me just update this chart. In the short term, there's support at these two highs here. That's around 88 the figure. Actually, we can probably see it easier on the 4-hour chart. Yes, here we are. At 88 the figure, I'd be a buyer of dollars there, with a stop loss probably below around 88.40. If it goes below here, then I don't really fancy it. And if it goes below 88.13, where it got down to last week, then I definitely wouldn't want to be long dollars. I think we're probably heading back down for another test down around here somewhere, so 87.5. But if in the meantime, I do like to buy dollars, and I think eventually we're going to have a look at this sort of 89.80 resistance here, the FIBO resistance, and beyond there we could head up towards sort of 90.5, 90.40 or so, where this FIBO level is as well. The Aussie performed really pretty well after the non-farm payrolls, and despite the stock markets heading quite a little bit lower, the commodity block went the other way. The Aussie got up to 93.10. Sorry, 93.01, I beg your pardon. And we're not so far from there now. It's at 92.90 at the moment, pretty much where it closed the week. Now on the hourlies, we're a little bit overbought, so I'm not expecting too much today. We have got the ANZ job ads coming out later on, but I don't think they'll cause too much of a flight in either direction. We've got the FOMC minutes on Wednesday, and then of course we've got the Australian jobs data on Thursday. Now if they look a little bit solid, that should send yields, Australian yields higher, bond yields higher, and the Aussie will go with it. Now I really do still think the Aussie's got plenty of potential on the top side, and if we can break out to above this 93 figure area, then we're heading towards now this is a little bit messy. We're heading towards this first blue line, as I've said before. 93.39 is this blue line here, the FIBO resistance, and above there we've got the next levels up around 93.85 or so. So it's going to take a while, but the head and shoulders is working well for us. As long as the Aussie stays around above 91.50, I like it. If it goes back to 91.50, I'd be very wary, because then I think we can head back to 90 cents and probably lower very quickly. But the dailies are looking okay at the moment, and I think buying dips appears to be the way to go. The market's still slightly short, I think, so there will be some covering, and if we saw it back down around 92.50, 92.65, something like in that range today, I'd be a buyer for an eventual breakout above 93 and heading towards 93.40. The weeklies are also positive, and we've got this bullish divergence on the weeklies, so that's kind of adding to the bullish tone. And I think eventually the head and shoulders target is up around 95.80, the measured target. Let's just go back here. So 95.80. So this is up just around here really. So just under 96 cents. So we've got plenty of room on the top side yet. And as I say, I think buying dips is the way to go. The Kiwi recovered well actually on Friday. It'd been looking pretty soft after that Fonterra milk auction earlier in the week. Didn't go as well as possible, and it sent the Kiwi lower, but it recovered, and it's back at 86 cents today. And it looks to me as though we've got a bit of a bullish flag here. If the Aussie keeps going, then maybe the Kiwi can make it back up to sort of, well, at least the 200-hour moving average. That's up at 86.15. And if we get beyond there, then maybe we'll get up to sort of 86 and a quarter and be dragged higher by the Aussie. The hourlies are looking okay. The 4 hourlies are still bid as well. Now, the only thing that might be a bit of a concern is, let me just get rid of this line here. On the weeklies, the weekly charts only, well, you can only just see it really, but it's an outside week here, so it made a new high and a new low, so it may have been put in a medium-term top here at 87, the figure, and if it fails before then, we could get a tail off and head back towards the downside. The dailies are looking slightly weak, so I'm not really sure about the Kiwi, but in the short term, I do like to buy it for a move back up to 86.40 or so. And this trend line, which acted as good support all the way up, now I think we might go up and test that again. 86.40. It's now resistance, and if we can get to the right side of that, then we should continue to push higher and may see another test of 87. But the weeklies are just a little bit confused at the moment, so I wouldn't be too pushy either way really on the Kiwi, but buy dips in the short term, I think. Now we're just going to have a quick look at the dollar index, if I can find that. Now the dollar index, although the euro and dollar Swiss and cable are all sitting right up against resistance here, or the euro is sitting on support as is cable, and dollar Swiss is sitting against resistance. The dollar index is interestingly has already broken it, and it looks as though it does want to head higher. It got up to 80.59 on Friday, which was basically in line with this top back here. If we can take that out, then we're heading up to 80 to 85, which is the 200-day moving average. And if we can head above there, then I think we could really be in for a decent run towards this 81.25 area, which would mean the euro a fair bit lower, as would be cable, and dollar Swiss higher. The dailies. The daily MACDs, they're positive, although they're in fairly neutral territory at the moment. But they do remain positive. And if we go and have a look at the weeklies, which had been pointing lower, they've actually now crossed and could be heading for a move to the top side. Now, on the downside, if we go back down towards 80, the figure, I think that's probably a buying opportunity. We finished the week at 80.44, where we are now, as you can see, but we need to hold the 200-week moving average, which is around 79.75 at the moment. Below there, I'd get a bit worried, but I don't think we're going there, quite honestly. And as I say, dips to 80, the figure, I think are probably a buy, and I'm looking really for an extended move beyond that 200-day moving average at 81.85 up to the resistance here about 81.25 eventually, which, as I say, means the euro lower, as is cable, and dollar Swiss a fair bit higher. So that's about it for today. I don't think we've got a big day ahead of us really. We've got the ANZ job ads, as I say, and the Sentix. There's not an awful lot else out today. The BOJ will be the first major thing to watch tomorrow, and then we've got the FOMC minutes on Wednesday and the Bank of England on Thursday. So it could heat up during the week, and I do think buying dollars on dips is the way to go, albeit probably play it fairly safe today. So that's about it. Have a very good one, and we'll talk to you tomorrow. Cheers.